You guys have to remind me to push that button. I get it all set up and then I don't do it. Good job. You can remember? You want the blinds open so we have some real sunshine while there is sunlight? Is that a no? You like it like this?
You can turn the light off.
I'll turn off one of the lights. I'll turn off the back light. Leave the middle light on. It's not that bright outside. But let's let real light in here. It's interfering with my view. You know, it's like daydream while I'm talking to you guys. Anyway. Yeah, okay. That's what I'm doing. Okay. So anyway. We really want you to know how to do these various methods of inventory. Extremely valuable. That's a rough thing I think about going to college. It was for me. Although I had very few professors ever say this, keep trying to teach me or get me to learn about it. So I do that all the time because learning something that is of no value to me was really hard. Right? So it's not for credits, it's not for grades, it's for knowledge. Really. Really. You want to know everything you can about everything. It's the way to go. In life in general, it's the way to go. So anyway, more productive lives. So what do we got? Inventory and units we did, right guys?
Yeah.
You guys are going to help me with this? Yes?
You told us to remind you to do perpetual LIFO and moving average.
Yeah, that's what I'm doing. You weren't paying enough attention. She was, luckily. Right? Yeah, so, yeah. No. Yeah, we already did periodic LIFO, periodic FIFO, and periodic weighted average, and now we're going to do the perpetual ones. But I'm going to put the stuff back up here so we can see it. Okay? So thank you. That's good. She did remind me. You remembered to remember after you ignored what I was talking about. So that's good. That's better. All right, so anyway, the beginning inventory was how many units? 16, $9, right guys? 16 units, $9. And then we could do them in, go away. All right. We could do this in dollars, of course, right? So this is what we were doing. Let's get everybody on the same page again, and I'll stick the notes out here so we can see it. What was 16 times 9?
144.
144. All right, and then the first thing that happens is a sale. By the way, could I have a purchase instead be the first thing? Of course, right? But you have to keep them in order for perpetual, right guys? Because with LIFO, you can't sell it until you have it. That makes sense? So now with this first sale, we're going to have to sell some of that beginning inventory. Got the idea?
Yeah.
That's on perpetual. With periodic, you pretend you bought everything before you sold it. Anything. Make sense? Okay. With FIFO, it doesn't make any difference. You're always selling a couple of stuff. Right? All right. So we know how many units?
Sold 12 units.
12. Okay. And so it's 12 units, but we don't know the dollars for those, do we? Right? We do not know the dollars for that. Yeah, that's what we want, and that's going to be our cost of goods sold. And actually, this is even going to be the cost of goods sold entry, right? It's credit inventory, because I don't have it anymore, and debit what? Because it's the major cost of what I sold, according to sales. I'm crediting inventory, debit what, guys? When I sell stuff, I either debit accounts receivable, or cash, right? And credit what? When you sell stuff for the sales price, what do? I sell something, costs me $100. It's either debit cash or debit accounts receivable, depending on whether it's a credit sale, right, or a cash sale, or maybe even debit under revenue, right? It could be. Okay. All right. And credit what? Sales. Sales revenue. Come on, you guys. Okay. Let's say it costs $60. What do? I took the thing out of the inventory, handed it to them, whatever it is, right? That I'm selling for $100. What do I have to credit? Inventory. What's going on here, right? Merchandise inventory, $60, right? It's the major cost of getting the sale. So what do we call it? See, it's a major cost of getting the sale. Cost of goods sold, which is what kind of an account? Seeing as I'm going to put on my income statement, sales less cost of goods sold is gross profit. It's an expense. It's the major cost. All the costs of getting my revenues are called what? Expenses. So what's cost of goods sold, seeing as it's the biggest cost of getting my sale? It's an expense. Why is this not connected? Everybody got it? That's common sense. Everybody should go, yeah, that's what it is. Okay? You've got to get to that point, right? When somebody asks you about something that you really know, how long does it take you to formulate an answer and throw it out there? It's just automatic. Those of you who are sitting there ignoring me because it's just so simplistic, intuitively obvious, that's fine. Those of you who really didn't know the answer to those questions, oh my gosh, awful, right? You know what expenses are, come on, right? Okay, anyway, so yeah, it's gonna look like that, isn't it, guys? Okay, good. So, what happened second? Is the purchase, isn't it? How many units?
18 units.
How much they cost?
$10.
That's 180, I think, isn't it? Yeah. I think so. A little beyond my skill set, but I think it's funny. Okay, right? So we know what the purchases are. This is just the same as we were doing before. Okay, then what else do we have? Sale to, how many units was it?
19 units.
All right. We don't know what those are. Guess what the journal entry is going to be for that one?
Cost of goods sold.
Debit, cost of goods sold. Credit,
Inventory.
inventory. These are the credits to inventory. We're computing them. Got it? We're computing them. So if I ask for the journal entry, it's a big deal, huh? Okay? All right. And then what happens? Another purchase, I think. How many units was it?
17 units for $11.
How much is that?
$187.
Everybody got it? We're good, aren't we? We know what we're doing here. Okay, that was everything, wasn't it? What I'd like to know, this is your job. I want to know what the ending inventory is. What's that number? And I want to know what these two cost of goods sold are. Got it? If I knew the ending inventory, I could calculate the cost of goods sold. If I knew the cost of goods sold, I could calculate the inventory. Everybody agree with that? No, you don't. Okay, how many units do we have left at the end?
20 units.
Yeah, how do you know it's 20 units?
That's the added purchases and subtract.
16 plus 18 plus 17 plus 12 plus 19. Everybody agree with that? That's what it is, isn't it? Sure. All right, let's do this. Cost of goods sold schedule. What's it going to look like? Beginning inventory. Plus what? Purchases. We did this before too, didn't we? Do it in units. Do it in dollars. Right, guys?
Yeah.
We got available. What I start with plus what I buy is what I have. I'm brilliant. Okay? Beginning inventory plus purchases is available. Right? That's easy. Subtract what I have left, and what is that going to give me? I guess what I don't have left. The stuff I don't have left is called what?
Cost of goods sold.
Cost of goods sold. The stuff I do have left is called what?
Ending
Ending inventory. This is common sense, isn't it? Let it be common sense. Don't memorize things. Some of you are still trying to memorize things, and as they get harder, you are even more tempted to memorize, aren't you? We all are. And then it explodes on us. There's way too much here to memorize, okay? It'll do you in. But if you understand it, if you know it, it's nothing. So work on understanding, and then, so you'll math, right? And the math is add, subtract, multiply. There's not even any device, right? On this one. Okay, good. So let's get these. What was our beginning inventory in units?
16.
What was it in dollars?
144.
It's right there, isn't it, guys? Okay, how many did we buy?
35 units.
There's 35, 18, and 17. How many are available?
50.
We already did that, okay? How many did we sell? 12 and 19 is how many?
31.
How many are left?
20.
Whoops, put it in the wrong place. I always do that. Say it in the right order, right in the wrong place. Okay, this was 31. So how many are left? 20?
20.
Is 51 less 20, 31? Yes. Okay. What was the total purchase cost? 180 plus what? 187? How much is that, guys?
367.
What's 367 plus 144?
5. 11.
Now, we did that last time, but that's how you do it, right? Nice little review. It's all right. If I calculate the ending inventory, in every case for all the different methods, that will give me cost of goods sold. It's also true if I calculate the cost of goods sold, I could calculate the inventory. Got it? They have to add up to the available, of course. Okay, so here we go. What did I tell you about perpetual FIFO?
Same.
Same as periodic FIFO. Do you got your notes sitting in front of you? So perpetual FIFO. All you got to know is it's the same as periodic. That's because we're always selling what? The oldest ones keeping the newest ones. Both methods come up with exactly the same numbers, huh? They're the same units, okay? Same as periodic. That's a great thing to know. It's going to save you time. So what was ending inventory, and cost of goods sold there.
Ending inventory was $217, and then the cost of goods sold was $294.
So it's going to be the same for both of them, right? Got it? All right, so you can do that. Now what we'll do is we'll do some T accounts for perpetual and LIFO. So this is going to be perpetual LIFO, okay? And for perpetual moving average. We call this one moving average because every time I buy something, my average cost changes. Assuming I don't buy it for exactly the same cost every time, right? So I have a new average every time. Versus on the periodic, I use weighted average because I buy everything and add it to the beginning inventory and then get a weighted average, right? So they're called what they are, okay? Accountants always do this. It's the most boring profession. Maybe that's why everybody thinks accounting is boring. Because we always call everything exactly what it is. Because we don't like to have to make it up or memorize it. And it's just common sense. Business is common sense. You know what? If you are really nice to your customers, and you give them a good product at a good price, and you give them good service, they will always come back. Works every single time. People write books about that. Periodically, how to make money in the business world. That's it. True? Who do you go back to? People who sell you spoiled milk or people who sell you fresh milk? People who charge you $10 a gallon or people who charge you $2 a gallon? Who do you go back to? I said, right? And the store that's clean or the one that's dirty? And this is just common sense. Let it be. Business is common sense. It's the simplest thing, right? We just do it. And every once in a while you come up with brilliant ideas. You know, like treat your customers really good. Your competitors don't. You take all their customers away. And you're a hero. I'm not kidding. Treat people with respect is really good. It's a neat thing. I don't know, treat you guys with more respect. I hope I am. I hope I treat you with respect. All right, anyway, let's do perpetual LIFO. What do we have? Let's start with where we're at the beginning. Now, remember, they'd be different beginning inventories with the different methods in real life, right? This is just for demonstration purposes. So let's write down what we got. What's my beginning inventory? It's right here. 16 units at what?
$9.
How much is that?
$144.
Everybody good? I have one layer. This is called a LIFO layer. I have one layer of inventory. It consists of 16 units that I bought for $9, 144. But remember, I'm always selling the most recent ones I bought, right? So if I do a purchase first here, what would happen? When I do the first sale, right, I'd have to sell the ones from that first purchase, not from the beginning inventory. Got to remember that. Okay, it'll be clear here in a second. All right, so what happens first, though? In chronological order, what happens first here? On the 10th, we did what? Sale 1, didn't we? How many units? 12 units. Which units do they have to be, everybody? The only ones you have are the beginning inventory. You have to sell them. If we had a purchase first, which I'll probably do when I quiz the test for final, right? It'd be the first purchase you'd sell. That makes sense? If you have two purchases, it'd be the second purchase gets sold first. Got the idea? Okay, so here we go. 12 times $9 is how much? What is that? 108. Thank you, sir. All right. Journal entry. Debit what? Cash. Oh, that's for the sales price. This is the cost. I hear cost of goods sold. I like that. Debit cost of goods sold and credit what? What do we just take them out of? Inventory. This is the debit cost of goods sold, credit inventory. Say I sold them for 20 bucks on account. Then I'd have 20 bucks times 12, which would be 240, right? Debit, cash or accounts receivable. I guess it's not accounts receivable. Debit, accounts receivable, and credit what? Sales. What would be your gross profit? You know, the cost here is 108, you guys. I just sold it for 240. What's the gross profit? 240 minus 108. It's common sense, right? 132 is your gross profit. That's not your net income because you have all your operating expenses, right? Salaries, rent expense, tax expense, right, guys? Let this be common sense. Tie it all together. Don't learn one little piece at a time and hope it fits somehow magically. It just fits, okay? It just does. It's not magic. So what do we have left at this point? We're going to keep track of where we're at. What do I have now? What's this layer? How many? You had 16, you sold 12. What do you got? Probably 4. What'd they cost me?
$9.
Seeing as I bought them for 9 and the cost of goods sold was 9, right? You retired them at 9, it's 9. What's left? What's 4 times 9? $36. What's 144 less 108? $36. That's solved. All right, then what happens? What's the next thing that happens in order?
You purchase.
Purchase 1, right? How many units is purchase 1? 18. We already did it, didn't we? This is too easy. 18, what'd they cost us? $10. What's that in total?
180.
Okay, here's where things look different, okay? I've got 4 that I bought for $9, right? And I have 18 I bought for $10. So how many units do I have right now? 4 and 18? 22 units. I am going to compute how much they cost. Got it? What they cost in total? 4 of them were 36, 10 of them were 180. What's the total of the two? 216, is that what that is? How would you find out what the average is? It's a moving average. How about taking 22 and dividing it into 216? I'm not kidding, it's that easy. Everybody see it? So what's 22? And you have to practice a few times. Don't just pray you remember this. Under pressure on a quiz or a test, what's going to happen to you? You're going to get confused, get screwed up, mix up the methods. Practice a little, right? Do some. Get so it's automatic, okay? And you're going to sit down and you're just going to get the points. It's about half the time that, I would have allocated to it. Because it's just easy. There's nothing to this, right? Really quick. So anyway, and don't rush then, because you don't need to, because you know how to do it, right? No need to rush. What's 22 into 216? 9 what? 80?
9
Even? It's not 9 point...
9.81818181.
Oh, it's $9.81. Or $9.82. It's not 9.8. You go to the store and say, you ask somebody, how much does that thing cost? They're not going to say $9.8. I've never heard anybody ever say that. It's $9.82. You guys realize we're working with money here? This class is about money, right? Business is about money, ultimately. It's about providing goods and services and taking care of society and all that. But it's also about money, right? We measure things in dollars. So this is $9.82. I just love it when people give me an answer to a problem that's money and they tell me it's 9.8 or something. Really? That's how you measure dollars? Honest? No, you don't. Okay, so $9.82, is that what it was?
Yes.
That says 9.82 honest. Oh, okay,
We'll
so
believe.
yeah, you'll believe me. 9.82, okay? So now when I sell some, guess what they cost on average? $9.82. Boom. Of course, you leave it in the calculator. If you left it the computer, all this stuff's computerized, right? This is just so you know what's happening in the computer. If you don't know what's happening in the computer, you're not a bit of value. We'll have a computer without you, right? We're better off. If you do know what's going on in the computer, now we need you, right? It's always true. Always true. Okay, so anyway, what do you think? What happens next, guys? I think there's a sale next, right? By the way, could I have 2 purchases in a row or 2 sales in a row? Of course, right? So what's the deal going to be? If I have another purchase, I have a new average, right? If I do 2 sales in a row, they'll stay at the same average because I didn't have a purchase. Okay, anyway, what's sale 2? That's the next thing that happens. How many units? 19 units. This is amazing. What do you think they cost? About $9.82. Because that's what we just calculated, right? That's what the average one is. Okay? So what's 982 times 19? Rounded to even dollars, different. How much was it?
You want even? 187. Or you can have $186.
Yeah.
$186.
Yeah, let's do even. I'll let you round to the nearest dollar. 187, just to make it simple, right? We can round to the nearest dollar. Okay? So 187. In real life, of course, the computer doesn't care. So let's keep the decimal places, right? Okay, so you go, what's that journal entry? Debit what? Cost of goods sold. Credit what? Inventory. Of course, it always is. That's what we're calculating. This was debit cost of goods sold, credit inventory. This is debit cost of goods sold, credit inventory. That's what we're doing. Okay, you had 22. You sold 19. How many do you have left? My advanced math skills, I get 3. Okay? What do they still cost, seeing as you had them at 982, and then when you sold them, the cost of goods sold was 982? The ones that are left are at what? 982. Of course they are. Now you can actually see it. That's good, sort of. Okay, so what's 3 times 982?
$29.46.
$29.46. So we'll round it to 29. Did that work? What's 216 here less 187? It's a miracle. It's 29. Of course it is, right? Got the idea? Okay, then what happens next? We got more stuff. We bought 17 and 11. Is that the last thing we did? Okay, so you buy 17. This is going to be remarkable. You're not going to believe it. We're so good. 17 units at $11. What do we say those cost? We already calculated up there. That's why I like calculating them in advance, because you can just use them and do the problem, huh? Right? Okay, this is amazing. Look what we've got. 20 units. Does that sound familiar to you guys? Yeah, it's the ending inventory. Of course it is, right? Everybody agree? My ending inventory is 20 units. I got to figure out what they cost, though, don't I? So my answer to the problem is going to be 20 units at what? 29 plus 187 is how much? 2 what? Okay. All right, and then what's the average one? If I was going to do more sales, what would I have to do? Take 216 and divide it by what? 20. What do you get? $10.80, something like that. All right, $10.80. Ta-da! We can move on. Okay? Everybody good? What I want is the 216. Is that the same as it was for LIFO periodic? I think I screwed up the problem because I had the. Was it the same on this one? No, it's different. Okay, good. And imagine it's millions, right? It'd be a lot different. Okay, got the idea? Sometimes I have the quantities such that it works out the same number. That could happen. Right? Don't panic if it does. Write it down. Okay, so anyway, 216 is the answer right away. What do I have for cost of goods sold, everybody? 2 ways we could go. We could take that 216, couldn't we? And we could plug it in here. 216 is the ending inventory. That's what we've been doing all along, right? What's 511 less 216? Cost of goods sold. How much is that? 295. Okay? Guess what? If you change the ending inventory, you change the cost of goods sold. Right? Because if you're using different methods, that makes sense? Of course it would. Right? Because cost of goods sold plus the inventory have to add up to what's available every time. Okay. So what's the other way you could do that? How else could we get that 295? How about add together what? 108 and 187. What do those two add up to for total cost of goods sold? A miracle. 295. Total cost of goods sold. Everybody got it? This is easy, isn't it? Okay. Let's try another one. You know, it's really kind of fun. Those of you who have been working really hard in this class, which is the number, maybe the majority, this is getting easy in this class. Still taking all your time, but it's getting easy, isn't it? Okay, another piece, another piece, another piece, another piece. It's called acquiring skill and becoming a professional. It's easy. Now, the new stuff's never easy. But, you know, stuff you never did before, which I hope you always get to do stuff you never did before. It's really fun. But layering another few times, easy, easy, easy. When I started my PhD program, I thought I was going to die. Because I was really good at the stuff I could do. And then I went there and it had nothing to do with what I was learning in my PhD program. I mean nothing. I was just an idiot. Taking high-level statistics classes. I didn't know anything. Right? Look at finance theory, didn't know anything. Psychology, right? Theory and psychology, oh my God. You guys think psych's an easy class? Man. Oh, man. I took a marketing class once, those research methods in marketing. Holy cow. Oh, I thought I was going to die. I just thought they made me take it. Didn't want to anyway. So I think marketing is kind of fun if you look at ads. This stuff is just statistics, math. Oh, man. It's a mess. Let's do this perpetual moving average. It's exactly the same idea, okay? Exactly. You know what I did? Did anybody notice? Yeah. I did the average first. Oh, for God's sakes. I thought I said I was good at this stuff. Guess not. Today. All right, change your notes. This is perpetual moving average. Who noticed that and didn't tell me? Who was that awful person? You did? You did? You did? Thanks, you guys. That's great. Okay, anyway, now this is perpetual. You didn't know it was the wrong one. How many knew it was the wrong one? Uh-oh. All right. Perpetual moving average, because I kept doing the moving average, didn't I? Let's do perpetual LIFO. Oh, for God's sakes. Okay. Let's do perpetual LIFO. I better delete this tape. No, I'll put it up there. All right. I make lots of mistakes. All right. Let's do perpetual LIFO. One, you got to sell whatever you've got, and the most recent ones you bought. I started out saying it right and calculated it right. Okay, beginning inventory was what? 16 units at $9, just in this little simple problem, right? In real life, they wouldn't be exactly the same, but you start with whatever you start with. Okay, if I sell some, those are the ones that are going to sell, right? If I buy some first, then I have to sell those first. Okay, I already said that last time, and then screwed it up. Okay, so sale one is what? How many units was it?
12 units.
Yeah, so it's going to be the same in this problem, only because I didn't do a purchase first. 12 times $9 was 108. Okay, so that's going to be the same. Debit cost of goods sold, right? Credit inventory. How many do we have left now? Same as over here, only because I didn't do a purchase first. 4 units at $9 is 36. Okay, now when am I going to sell those? After I sell any I buy, right? Maybe never. If I don't deplete my inventory below 4, I wouldn't sell them at all, right? That makes sense? Okay, so what are we going to do next? Purchase one. How many units was it? 18 at $10. So once you got it down, you got it made. How much is that?
180.
180. Okay, so now what I've got is 2 LIFO layers. From the beginning inventory here, I have 4 units at $9. And then from the first purchase, I have 18 units at $10. Okay? So what's going to happen when I do a sale? Sorry, I screwed that up, you guys. What's going to happen when I do a sale? How many did I sell in the first sale? Second sale, I apologize. 19, okay? 19 units. Which ones am I selling? Which ones, guys?
4 units at $9.
That would be first in, first out, and one last in, first out. Which ones are the last ones we bought? 18, right? Got everything right so far, and you screwed it up. Okay, so 18, right? These 18 go first. Why? They're the last ones I bought. Everybody got it? Okay. 18 units, which cost me how much? $10, and we already knew that's 180, didn't we? How many more do we need to make 19? One more. What's it going to have to be? One of which group? One of these 4 is gone. Right, guys? We're depleting our inventory down to 3. So if you dip into the earlier layer, this is called LIFO liquidation. If you read about it, if you move into the earlier layer, you're getting those cheap ones you're selling, right? Okay. When companies went to just-in-time inventories, it was a big deal a number of years ago. Companies had lots and lots of inventory, and the Japanese were very good at, that's when they were going to take over the world economies, right? Now it's the Chinese, things changed, right? Anyway, but the Japanese were very good at just-in-time inventories. That's because their production plants were right next to where they were storing the raw materials, were right next to their customers, right? You know, everything is real condensed, close. We had a real problem. We were spread all over the country, right? So it was tougher for us because we'd have more inventory in different places. We got a lot better at it. We minimize those inventory levels, minimize them. What's the problem with having a whole bunch of inventory? It becomes obsolete. You have to throw it away, right? Or you have to sell it as scrap or something, right? It gets damaged, it gets lost, it gets stolen, right? You have to pay taxes on it. You have to pay insurance on it. You have to pay for the warehouse where you store it. What would be the best thing to have? No inventory. If you could walk into the store and what you are buying is immediately produced or delivered, they'd be happy, right? That's just in time. So as soon as my customer's standing here and I'm handing him something, my supplier hands it to me and I hand it to my customer. You know what? We've gotten really good at this with logistics. You see UPS advertising about logistics all the time. What does UPS and other companies do? FedEx, others. What do? Out by the airport here, there's all kinds of warehouse space with all kinds of products belonging to all companies all over the world. And they're stored here. Why are they stored in Louisville? Because UPS has a major hub here. There's an amazing amount of freight traffic that comes out of here. Have you ever noticed you buy something online, it gets delivered the same day sometimes? Next day? They tell you it's going to take a week, it takes one day, or it takes half a day. Why? It's right up the street, you guys. And they can ship it really fast. Right? Pretty cool, huh? It belongs to the manufacturer, right? And the person who's selling it to you never takes possession of it, never touches it. It's stored at UPS, still belongs to the manufacturer, not to UPS. UPS only gets paid to deliver it, right? To handle it and deliver it, right? They ship it to you, and you buy it, right? And your vendor, whoever's selling to you, buys it at exactly the same moment. And it gets shipped almost immediately. It's just amazing. Try to stop a shipment sometimes when you buy something local. You know, oh, no, that wasn't what I wanted. Well, sorry, you'll have to return it. About 10 minutes ago, it's already on its way. It's unbelievable. Okay, so that's kind of a just-in-time thing, wouldn't you say? Except there's lots of warehouses in Louisville, or lots of warehouses full of stuff in Louisville, and lots of jobs working for UPS handling it, right? Okay, they're not bad jobs. They're all right. Okay, anyway, so what do we have left now after this? What do you think, guys? 1 unit at how much? I should have written it down. $9. It's $9, isn't it? So what's that going to be? How much is the cost of goods sold, everybody? 189. Add the two together. Debit what? How about cost of goods sold? Credit what? Inventory. Good. All right. What do we have left? We had 18, but we sold all 18. We had 4, but we sold 1. What do we have? 3 units. It cost us what? This is too easy. $27. It would be easy with piece of label, right? Okay. 3 at $9. When am I going to sell those? Only if I deplete the inventory some more, right? And then what else happened? We're going to have 17 more units. If I did more sales, what would I do? I'd sell those first. Everybody got it? If I did another sale, that would go first. Okay? And how much were those? 11 bucks? And what was that? 187. Okay, so I have 2 layers. I have one layer that's 3 units at $9 for $27. I have another layer that is 17 units at $11. 3 units at $9, 17 units at $11. What's the total I have? It's a miracle. 20 units, which is, of course, our what? Ending inventory. What did they cost, everybody? Add it up. 27 plus 187 is what? Add up. We're done. Got it? Did LIFO come up the same before both of them? Maybe that's one. No, it wouldn't. It wouldn't.
Oh.
It's different too in that one. Okay? So you get different ending inventory, different cost of goods sold, right? Okay. By the way, what was the journaling for this? I didn't say it. Well, I probably said it. Didn't write it down. What was it? 108. Debit what? Cost of goods sold. Credit. Inventory. What do those two add up to? 189 and 108. Total cost of goods sold is how much? 297. Let's see if this works. 214 ending inventory, 297 cost of goods sold. Let's go back up here. Let's put in those numbers. And pretend they're millions, so it's not just $2 off, so somebody would actually be willing to do this work. So this is 214, okay? Material, in other words. What's 511 less 214? Miracle, huh? Everybody got it? In spite of me? Everybody got how to do this stuff? Practice a few of them, right? Okay. So what else do you want to do? That's probably worthwhile. Sure it was. We did number 2 already on that quiz, right? You want to do number 3? This is a cool one. We did 4 and 5 too. Oh, then there's a bank statement too. You can do sometime.
Yeah, I think we
And that was the cash discount.
Yeah, I think we did that.
That was after you went to sleep. I can sleep with my eyes open, no problem.
Probably wasn't sleeping, probably wasn't.
I was grading in the intermediate test last night because I procrastinated so long after the football game. Hey, we won, you guys. We won a game. Little first graders against little first graders. Just makes an amazing difference when you play this early, when you're back young. Yes.
When you're writing journal entries for the sales discount, okay, so, like, this is from one of the problems in the book. It says, sold merchandise to customer asks at an invoice price of $9,000, terms 310 and 30. They pay it back in 8 days.
9,000, and it's 2% 10?
3%.
3% 10?
Yes.
Who in their right mind would do that? I have never seen that big a discount in my life. You know what interest rate that would be? 20 days, 3%. 18 and a quarter times 3%. Never pass a discount like that one if they gave it to you. Maybe there must be such a thing, or some PhD student made it up. It never worked in their life. Okay, but anyway, okay, 3%, right?
And then they pay it back in 8 days, so they get the 2% discount.
Okay. They pay it in 8 days.
Yeah, so it's going to be $70 discount. So when you're writing the journal entry,
Everybody see that's a 270 discount? They paid it within the term? Okay, so when you sold it, you would have debited accounts receivable and credit sales, right? Everybody agree with that?
Yeah.
Nobody's behind on that. Now you want to do, they paid it all?
Yeah.
Okay, so what would you do?
Well, my question was, so I credited cash 9,000 and I debited.
Well,
accounts
debit cash.
receivable.
I'm getting cash.
Oh, my bad, yeah, I debited cash and I credited accounts receivable and that.
Okay, and how much do you want to credit accounts receivable for, seeing as they're paying out the whole thing? Whole nine. Yeah, good.
I wasn't sure if I should have taken the 270 off of that.
Yeah, well, what's happening here? They owe you 9,000, but if they pay you within 10 days, you'll give them a 270 discount off of that. So they're going to give you 9,000 less the 270. What's physically going to happen is they are going to send you, how much is that? 8,000. 730.
Yeah.
That's what's going to happen. So you wouldn't want to debit cash for 9 because they're not going to give you that much. Okay? So you got it. Kind of like I know you understood what they were doing, but then just connect it to the journal entry. You got it? Okay? So what do we have? 270 here?
Yeah.
What's that? We gave them a discount. That's that contra revenue account sales discount.
So my.
This is where sales discounts come from. Is people taking them, right?
Okay, so we credited cash and sales discount.
Debiting cash
My bad.
and
Yeah.
sales discounts.
Okay.
You got it. Exactly right. Okay? And then on my income statement, what I show is 9,000 of sales, less a 270 discount, and what's the net sale?
8,730.
8,730. Everybody got it? By the way, this is called the gross method. There's also a net method and intermediate will be found. It's no big deal. Okay? You record the net instead of gross. Okay? So it turns it around a little bit. Good question. Did that do it? We're there? Okay, cool. All right. So yeah, let's try number 3. Anybody else got a question? Any question? That's great. That's fantastic. I love it when people actually ask questions. How many other people in the room were confused about that at all? If you paid attention when I answered it. That's the other thing. When somebody asks questions, always listen to it. If they don't understand it, what do you bet you probably don't too? Right? What do you bet? Good opportunity. When you're sitting in business meetings, always do that too. You know, when the boss is talking to somebody else, listen. Unless it's a private conversation, then leave. And, you know, they're chewing them out or something. Okay. XYZ, ending inventory, was understated by 3. The ending inventory of the next year was overstated by 5. What's the effect on assets, liabilities, equity, revenue, or expenses? You know, those are these things, you know, balance sheet. Let's do this. Okay, now this is kind of strange. It turns your brain inside out, kind of. You know what over and understatements do, right, to the balance sheet and the income statement. In general, you know that. It's just several things are moving at once here. Okay, that's all it is. Okay, so one of the assets is what? Inventory. Everybody agree with that?
Yeah.
So if you over understate inventory, you screwed up the balance sheet. Everybody agree with that? And you're not doing anything to liabilities here in this particular problem. By the way, we could have that they didn't record buying inventory. They should have been debit inventory, credit payables. I'll do that kind of stuff to you in intermediate too, not in here. Okay, we'll keep it straightforward, relatively straightforward. This is enough for now. This problem drives people crazy. Okay, these types of problems. Okay, the inventory then is on the balance sheet is screwed up. What's going to have to be screwed up by exactly the same amount, seeing as liabilities are going to be okay? It's got to be equity. Equity's got to be exactly the same error that inventory is. It just is, right? So you already know that. Okay, that's pretty good, huh? If they overstate the inventory, guess what? They overstate the equity. If they understate the inventory, they understate the equity. Of course they do, right? Everybody's good with that. You already knew that, okay? So what about revenues on this? Inventory, that doesn't have anything to do with revenues. So this is okay, and this is okay. So guess what? If the equity is messed up, we didn't directly change equity. There's no contributed capital or something and no dividend. So what is it? The expenses must be screwed up exactly the same as the error in inventory, the error in equity. It's got to be the same, right? Those have got to be the same, except it's going the opposite direction. Because expenses, of course, reduce income, right? Too high of expenses reduce income, too low expenses increase income. So this will be exactly the same error too, right? Which is causing that error. Of course it is, okay? Now, here's the deal. These expenses, we're doing 2 years. okay? So if we are doing 2012 and 2013, we're going to have to do them twice, right, guys? We're going to have to do them twice. And this is going to be 2012 and 2013 too. So all of a sudden things get hard. What's the biggest expense for most companies that sell merchandise? If you sell goods to people, what's your biggest expense? Almost always. Not always, but typically it's the biggest one. Cost of goods sold. Okay. Okay, let's do 2 years cost of goods sold. 2012 and 2013. Beginning inventory, right, guys? Plus purchases is what? See, I can screw up purchases too, but we won't. I won't do that to you. I'm screwing up beginning inventory, right? Okay. And then what? Available. Subtract what? Ending inventory. You guys know that, right? We just did this. Is what? Cost of goods sold. And that's the cost of goods sold that goes up here, right? It's one of the expenses. Everybody good with that? So any error in cost of goods sold is an error in total expenses, isn't it? Everybody good? Okay, so here we go. What do we know? Ending inventory for 2012 was too low by 3,000. I guess I would assume from that that the beginning inventory is fine. Didn't say anything about it. I think beginning inventory is okay. I think purchases are okay. I think available must be okay. So what's wrong? This is too low by 3,000. It says understated, right? And the reason it's too low by 3 is we understated here by 3. You guys tell me what's wrong with equity the first year if assets are understated by 3. Yeah, this is understated by 3 also. Which must mean the net income is what?
Understated by 3.
It's got to be understated by 3. This is too easy to believe. Okay, which means expenses must be what?
Overstated by 3.
Overstated by 3. It's got to be the case, doesn't it? Just like that. Okay? Now wait a minute. If I subtract too small a number from the correct available, I've got the right number for beginning inventory. I've got the right number for purchases. I've got the right number for available, and I subtract too small a number from it. What do I have? Too big a number. I've got too much cost of goods sold, which is 3. You got it? That's where it came from. This 3 here is due to cost of goods sold being 3 too high. It's the expense is too high. First year's easy, isn't it? Okay, now here's the trick. Not a trick, but here's the insight, I guess. Okay? It seems like a trick. My ending inventory this year, a millisecond later when the next year starts, must be my what? Beginning inventory the next year. That's it. Don't forget that, of course. You guys know this, right? You don't close any of your asset accounts, liability accounts, or equity accounts, right? We don't really get rid of our revenue expenses, by the way. Where do we put them? We close them into what? Retained earnings. So we don't really get rid of the revenue expenses. We just start counting in the year, right? We take the difference between the revenues and expenses, gains and losses, revenues, expenses, all of it, and we put that into retained earnings. So, everybody agree to that? That's what we do. Okay, so we don't really get rid of them, but we start over. We close those accounts. But we don't even close the assets, liabilities, and equity, right? They don't go away until you start a new year. So the ending inventory of 1 year is the beginning of the next. So guess what's wrong with beginning inventory in 2013? If it was understated at the end of 2012, what's wrong with the beginning in 2013? It's understated, and this error is going to correct itself. Oh. Let's see how this is going to work. It's going to correct last year's mistake. Last year's mistake. It's going to get rid of it. Look how this is going to work. Assume purchase is okay, which we would in the problem because it doesn't say there is an error. What's wrong with available? If you understate the beginning, you add the correct purchases, what do you get? It's understated by 3. Let's assume the ending inventory were correct. If it was correct, what would happen? It's not in this problem. But if it were correct, what would happen? Your cost of goods sold would be too low by 3. Do those numbers look familiar to you? One overstated, one understated? Oh, so if the ending inventory was okay, it'd be okay. If the liabilities are okay, guess what the equity is? Probably what? No misstatement on the assets, if that were the case in the problem, right? If there's no error in inventory at the end, right? If there were none, this would be gone, wouldn't it? This would be gone, which means the equity must be gone. How would that happen? Think about equity. What's going to go on here? It's going to be in retained earnings. First thing I do is I have a 3 debit to it, right? I'm understating equity. What do I do the next year? You have 3 too little cost of goods sold, right? So assume revenues are fine. Cost of goods sold is too low by 3. Everybody see it? That's this one. Which is going to make net income what? Too high by 3. And guess what? Those two offset each other, right? They come in here and you'd have nothing wrong, huh? Perfect. But I made it more complex than that, didn't I? I gave you more. What happened? It says at the end of the year, ending inventory is overstated. Too high, is it? By 5? Okay, what does that one do? Handle them separately and we'll just add them together. That'll be easy. I know from the first error, I've got a 3 understatement of cost of goods sold. What's that going to do? You subtract too big a number. Said it was overstated, right? I'm going to be where on my assets? I corrected the first one, but what's wrong now with the new error? It's overstated by 5, isn't it? Everybody agree? Okay. So then what's going to happen? My equity must be overstated by 5. Really? Well, I got rid of the 3 here, right? I got rid of that 3 mistake. What's going to happen, though? I've got another one for what? This is going to be what? Overstated by 5, isn't it? Yeah, too high by 5. Overstated by 5. I got to have another credit in here of 5, don't I? To get it overstated by 5. So in the first year, this is 2012, understatement by 3. In the second year, what do I have to have? It's got to be an overstatement of what? 8. Really? How did I get that? Well, I've already got 3. If I subtract 5 too much from cost of goods sold, what happens? You're subtracting ending inventory from the available. 5 too much, right? What happens? I have 5 too little cost of goods sold, don't I? Look at that. What's 5 plus 3? It's the 8 understatement. Oh, this will drive you crazy, won't it? Okay? And that 8 understatement is right here. Right? Now your cost of goods sold are 5 too low. That's 3 plus 5 is 8, right? I think so. And what's that going to do? I have a 3 overstatement for fixing the beginning inventory of net income, and 5 for the error in the ending inventory, and what do those two add up to? Too much income by 8, right? That'd be the answer, right? So net income's overstated by 8, which of course is going to give me what? 5 overstatement of equity. Boom, there. This one, you got to work on a little, right? Okay, so what are the answers? 2012, what did we have? Assets are what? Understated by 3. Liabilities,
No change.
they're fine, no change. Equity has to be the same as assets, understated by 3. Please, you guys, quit telling me that assets do not equal liabilities plus equity, okay? Don't make that mistake. You can't have an overstatement of assets, nothing wrong with liabilities, and an understatement of equity. Virtually impossible, right? The error in liabilities plus the error in equity have got to add up to the error in assets. They just absolutely do, right? So make sure that happens. Look at your work when you've done it, and if you've made a mistake, you get your head turned around and go, wait a minute, that's impossible, right? Okay? What would I say on revenues? They're okay. Both years are okay. So is liabilities both years. What about expenses? Overstated by 3. What if I gave you net income? Understated by 3. Got it? What if I gave you cost of goods sold? Well, that's the expense that's overstated by 3. Right? Got it? Okay. Let's do 2013. Assets. We said the ending inventory is overstated by 5, you guys. What is it? What does it mean? Assets are overstated by 5. It's got to be. Liabilities?
No change.
Yeah, there's nothing. Yeah, it's okay. No change. What must be for equity then?
Overstated by 5.
It's got to be overstated by 5. It's absolutely got to be. Okay. Revenues? Nothing again. It's okay again. Right? Now it gets harder. Expenses? Let's see. If we were off by 3 last year, And we're off by 5 the other direction this year. 3 debit, right? I got a 3 debit here. And now I want a 5 credit. What's it got to be? How do you get from in an account, right? This is equity. Right? I've got a 3 debit from 2012. And I already know that I want a 5 credit at the end of 2013. It's got to be paid. So what's the overstatement of income that came in? 8. Income's overstated by 8 because cost of goods sold is understated by 8. Right, guys? Just is. We fixed the 3 error and then we made a $5 additional error. 5,000. Okay. All right. And where is that at? Right here. There's the 8 on the expenses understated, and there's the 8 overstatement in net income. The equity. Got it? Cause the equity going to change. That'll kind of drive you crazy. Would you guys agree with that? Work on those. Study them. And look at how many points I gave you. Do I want you to know how to do this? Yeah? What would you expect to see on a test? If I do one of these, maybe 10? Got it? Wait a minute. This is a 25-point quiz in those days? I won't give you 40. Maybe I'll give you 10, 12, something like that. Maybe 12, 1, 2, 3, 4, 5, maybe 15. Okay? Know how to do it. Know how to do it. And that's tough stuff. It's hard. See you folks.